Hello everybody, how's it going today? Welcome back to course number 2. And today we're going to talk about how I personally view the market and just general psychology as well. I hope you guys enjoyed the introduction, just to tell you guys a little bit more about me and to tell you guys where my motivation comes from, especially as well, right? And just to let you guys know, if you missed the course number 1 there, or sorry, lesson number 1, my main motivation comes from my family. I really wanted to take care of them, and it felt really good being able to help them financially, especially to know that they've done a lot for me as well. And I wanted to tell you guys a little bit more about my lifestyle and some of the things that I've been able to afford. Now keep in mind that I'm 34 years old. I'm no trillionaire, I'm no billionaire. I'm just a guy who wanted a little bit more free time to appreciate what I could do in life. In terms of enjoying, different countries, enjoying some of the luxuries, being able to take care of friends, being able to take care of family. And, this is not a guy that's trying to show off or anything, so please don't take it like that the wrong way at all. It's just me trying to let you guys know about how far I've come in this particular space and how much I appreciate everything that I have now as well. So let's talk about how I view the market. Now, you guys have to ask yourselves as well, how do you view the market, right? Do you see it as something where you're hoping to make a quick 30% gain instantly, or over a few days, or over a few months? Do you see it as something where you're going to make many different trades and try to focus on basically compounding these trades and gaining a small amount over time? It really comes down to what kind of trader that you are, right? So myself, just to tell you guys about me, I'm a scalper, right? I'm a scalper, and I firmly believe in making small profits that add up over time. And that's the most important thing to me. Now, you know what the most demoralizing thing in the market is? The most demoralizing thing in the market that I've been through is making profitable trades over 2-3 weeks, and then it only takes one single trade to actually wipe you out. Have you guys ever been through that before? Yeah, you've been through that before. Anybody who says that they haven't, they are absolutely lying. So just think about that for a moment, where you're making profit for 2, 3, 4 weeks, and then that one single trade, you end up wiping yourself out entirely. Now, what's great about trading is that you can actually stay at home. You can work in your pajamas if you want. You can work in your jeans if you want. And you have no one that's going to hold you accountable. You're your own boss. You can set your own hours anytime that you want. It's kind of the dream. It's what every single person wants, right? Now, keep in mind that this is course number 2. It's much more difficult in terms of psychologically understanding this work ethic that I'm trying to explain to you. Course number 1 was basic in the sense that it covered fundamentals such as candlestick analysis, such as basic RSI, MACD, etc. Despite how advanced they might have been, the most important tool or the most important fundamental to me to be a successful trader is being emotionally and psychologically strong. And you have to have that mindset of an actual winner. So the allure of trading is absolutely amazing. And every single person wants to be successful in the market. They want to have this dream job that we have working at home. Imagine how rewarding it is. Imagine how cool it is to not have to answer to a single person. Well, that's kind of cool, right? You have to admit that it is, absolutely. You don't have to worry about a 9-to-5 job. You don't have to worry about commuting to work. You don't have to worry about year-end reviews to see if you get a raise or not. You don't have to worry about making these mistakes and someone's breathing down your throat. So just as an example as well that you guys will be able to relate to, what defines an obedient dog? And the reason I'm bringing this up is because I'm actually getting a dog. I'm getting a little Pomeranian / Husky. Well, actually not so little. But when I think of the same rules that will make this dog be successfully an obedient dog, it's actually no different than the stock market as well, right? Or even when it comes to having children as well. You have to have a set of rules that you are going to abide by. What's the point of having rules if they're only going to be broken 2 or 3 times a year, right? So just as an example, okay? Let's say you had a job where you were making a mistake a few times a year, maybe 2-3 times a year, and it actually ended up costing the company tens or hundreds of thousands of dollars. What do you think that employer would actually do to you? You guys would probably be canned, right? Absolutely, 100% you would. So when you think about working at home as well, you've got no one that's going to hold you accountable except yourself. And that's the hardest part of working for yourself at home in the stock market. Everybody wants to be right, and the reason why the majority of people fail, why 90, 95%, 98% of people fail in the stock market is simply because they are so stubborn and they don't have a way to actually hold themselves accountable. It's really hard to say, I was wrong. And nobody wants to admit that because it's just a human trait. And I kid you not, that the day that I was actually able to overcome this human emotion of saying to myself all the time, oh, it's going to reverse. Oh, I'll eventually be right. Oh, it can't go up any higher than that. Oh, it can't go down any lower than that as well. When I actually started to admit to myself that I'm getting stopped out, that actually changed the way that I traded entirely as well. So what I'm getting to is trading, guys, at home with no boss. Despite how alluring it is and how attractive it is to be at home and not have to answer to anybody, you have to be able to answer to yourself, which is even harder than having to answer to somebody. Because if you don't answer to yourself, well, like I mentioned, if you keep making a few mistakes at a job every so often per year, you will eventually be canned. And now think about it from the perspective of the stock market, where if you are stubborn and you don't close a position when you actually should, to minimize this small loss and to prevent it into turning into a catastrophic one, well, guys, you're going to lose a lot of money and it could potentially wipe you out entirely. Sometimes a trader only needs to lose one big trade, and it's because of his or her stubbornness that they end up getting completely wiped out of the game. So even though you might be doing really well, even though you are making these mistakes only a few times a year or a few times a month, sometimes your human side and your emotions will actually take over, and your stubbornness will actually take over as well, and you will get entirely wiped out. But what my point is with the whole dog thing is, if you want a really obedient dog, for example, show quality, right? You have to make sure that you are consistent and the rules are actually followed. It's just like trading in the market. You don't create a set of rules for yourself to follow and then say to yourself, sometimes I can break them, sometimes I won't break them. You can't really be like that whatsoever, because you have to stick to these strategies. And over time, I really hope that you guys have developed some sense of strategy and have molded my course number 1 into developing your own strategy that's now molding to your personality, right? But I know for a fact that a lot of you guys right now as well are still making a lot of mistakes, right? So every time we have a strategy, we have to modify it slowly over time and make sure that we keep being consistent. Because if we aren't consistent and we keep breaking our rules, then unfortunately, you guys are eventually going to get wiped out and you won't have the consistency that's going to make you profitable for the long run. So what I'm getting to one more time that you guys really need to firmly understand is that we need to hold ourselves accountable as traders. Because if we don't hold ourselves accountable, you will eventually get wiped out entirely. And that is one of the saddest things that can happen. To turn your small loss into a catastrophic one, it's morally it's demoralizing, guys. It really is. Or to turn your hard work of 3 to 4 weeks and just completely wipe it out in one single trade. We have to remember what the most important commodity, what the most important thing that we have is in trading, right? We have to protect it with all of our heart, and that's our money, right? We have to learn how to protect and preserve our money before we can actually grow it, because the most valuable thing that we have is the money that we have to trade. Your capital is so important, and we need to really understand that these stop losses will eventually be hit. And once they get hit, you need to not be stubborn. You need to make sure that you close your eyes, guys. You close your eyes, you click that X button right there, and you get out of that trade. And then you make sure that you don't trade anymore just for a little bit. because it's important for us to always be clear-headed when we're actually entering a trade. What I'm trying to drill into you guys is that we need to have a clear conscience. We need to make sure that we exercise our stop losses. We need to make sure that we protect and preserve our capital, because these are very important psychological factors that will determine whether you're successful in the market or not. And last month in September, I took a loss of about $4,000, $5,000. I don't remember. I played a pretty big position size of about $80,000 to $100,000, and it could have been awful, guys. My loss. It could have been so freaking bad. If you guys remember where it was, I tweeted it sometime in September 17 or 18. Okay, I went short right around. I'm gonna go to a 12-hour chart. I went short during that massive uptrend right here, right? And I went short maybe right there or something, like right around there. No, that's not it right there. No, that's not it. Sorry, wrong run. I'm sorry, guys. This is in September. Right here, okay? Yeah, I went short somewhere along here, right? And I was down like $4,000 already. And if I didn't actually stop myself out, I would have honestly, it could have been really bad. It could have been a liquidation because I didn't keep that much in my margin account at that time. And I realized, as an experienced trader who's made a decent amount of money in the market, that if I don't protect my capital, imagine what would have happened. I mean, ask yourself a question and give yourself an honest answer. Have you been liquidated recently? Have you come really close to being liquidated? If you have, there are two things wrong, right? One, you're not stopping yourself out quick enough. And two, you're not setting a large reserve in your margin account to make sure that your liquidation price is high enough or low enough, depending if you're shorting or going long. And a lot of people are very focused on things like, oh, how much money am I going to make? Like, where's the next big trade setups, etc. But what we really need to understand is that if you guys have actually lost something significant in the market, you need to make sure that you're evaluating these trades. Now, I touched up on the topic very briefly of learning from our mistakes, and I've got to do it again because these kinds of things actually take repetition. And I'm trying to really let you guys get into my mindset, right, of how I actually am when I trade, and what are some of the important psychological factors that influence my play and make me a successful trader. You guys have seen my win streaks. I go on like 94-day win streaks. I go on 30, 40, 60-day win streaks. Right now, I'm on a 24-day win streak over 20 trades, which is not really a big amount because it's the Udemy's 10K challenge. But over 18 trades with a 100% win rate, that's pretty impressive, I would say, right? So as much as I would love to teach you guys specific things about strategy, you also have to make sure that you have the mentality of a professional trader, right? Just because you have the talent, for example, right? You have a talent in any sport. You got to be mentally sharp and prepared psychologically for you guys to be able to be successful in the market. So what I really need to emphasize very firmly, once again, is that you need to make sure that you're reviewing every single loss of yours. Try this, guys, okay? Really, you need to keep a log of every single trade of yours. Every win, every loss, your position size, right? What coin you're trading, long or short, how much you lost, how much you won, etc. as well, okay? You need to keep a detailed statistic of your actual trades. You have to. If you are not keeping an Excel sheet of some sort that's tracking your statistics, how are you going to know your progress, okay? And guys, it's not my job or anyone else's job to make this for you. You have to learn how to use Excel. If you haven't learned how to use Excel, you need to go to YouTube and you really need to get these basic skills down because it's ultimately going to affect whether you're a successful trader or not. So make a spreadsheet, guys. Track all the statistics of wins and losses. And what I would like you guys to do is write down for every good trade that you make, right? For the good trades, write down all of the successes and the good things that you did right in that trade. and also write down the things that you could have improved on. And if eventually you'll find over time that there are some things that you are actually very good at. For example, myself, I am not a good swing trader because I'm high energy. I'm very spontaneous. What's the word? I like fast-paced events, right? And I like scalping, and it feels really good to me to capitalize on these small gains. Now, I know a lot of people have said to me, oh, Phil, you would do a lot better if you held it a little bit longer. But what people don't understand is that it's not just a matter of doing this or that to be successful, right? It's a matter of catering these strategies to what your strengths as an individual are. And if you are better as a scalper, if you get anxious when you're holding long term, then obviously scalping would work a lot better for you, right? And then when you have a loss, guys, right, focus again on your losses and say to yourself, well, this might not be something that I might want to be more careful of in the future. This might be something that I don't want to do again. Let's say you had a very catastrophic loss, right? And you got liquidated. Well, now write it down on a piece of paper as well, your losses, right? Write down some of the things that you did right and write down some of the things that you actually did wrong. And you'll find out very, very quickly what these mistakes are. And if you are determined to improve, why would you want to make these mistakes again, right? You got to make sure that you're acknowledging your faults and also acknowledging your strengths and play on them. If you have something that you're very good at, you might want to focus on improving it. If you have something that you're very bad at, well, you might want to focus on improving that as well, right? But if there's something that you're consistently doing wrong, you need to take a step back, guys, and realize, hey, I've lost so many trades because I'm doing this and that wrong, that you need to figure out a way to remove it from the situation. Because you have to think of trading and the market in general as somewhere that's going to make you feel very humbled. It's got a special way of humbling everybody in the market because it also has this special way of extracting a lot of money from your pocket if you've lost already. And keep in mind that the market, the way that I see it, is just a distribution of wealth, right? From people who are bad traders to people who are better traders, from the poor to the rich. That's kind of how I see the market. And you need to figure out a way how to preserve and protect your money. Because if you think about the market, okay, how are these guys so successful in the market? How the heck am I killing it day in, day out, right? Well, my background, as you guys know, is in engineering and mathematics. As an engineer, my job was to look for failure and to improve on it, and to keep improving the design over and over, and to dissect why it was actually failing, right? So naturally, I progressed into a trader, in my opinion, because it gave me the tools to look for faults. And that's how I recommend that you guys treat the market as well and your trading style. Look for places that are faulty and fix it. And the only way that you can really do that is to follow up on some paper or Excel sheet, right? But you need to have data. How can you become a successful trader if you don't have data? You need to write this stuff down, because just trying to remember it and saying for yourself is really not good enough. So what I used to do was I used to play too much in my margin and I wouldn't stick to my stop losses, right? This was like 2.5 years ago. So then what I did was I wrote it on a piece of paper and I taped it to my monitor that said, do not play a big amount in your margin account, and also always stick to your stop losses. And every time I looked at it when things were going wrong, right? When I was about to get stopped out, when I passed my stop loss already, and then I was really stubborn and I decided not to actually take my loss, I'd look at this paper and I would be reminded of the times that I actually lost a gigantic amount of money. And then I remember, okay, I'm gonna create this rule for myself of just sticking to my stop loss really quickly. And then that eventually prevented me from turning small losses into very catastrophic ones. So to reiterate very quickly, focus on your strengths. Focus on your strengths extremely much so, because it will help you develop your sense of style. And also especially use your mistakes and your losses as a learning tool. Because learning, guys, is all from losing, right? How are you actually supposed to be successful in the market if you don't keep losing? How are you supposed to learn? The best way to learn anywhere in life is to make mistakes. Whether you're a student and you've got sample problems in a math class or anywhere else, or whether it's a group discussion, or whether it's at a job, you're encouraged to make mistakes until you don't make them anymore. But you got to make sure that you hold yourself accountable, right? Once again, at a job, your bosses will hold you accountable, but at home, you need to have this type of structure. You need to make sure that you can say to yourself that you've made a mistake and you know exactly where this mistake is. Because if you don't know where this mistake is, how the heck can you fix it? So what you're ultimately trying to do, once again, is you're trying to not eliminate, but you're trying to minimize these losses, okay? Knowing how to take profit is one thing, but also knowing how to take a loss is another thing. So why are the statistics something like 90, 95, 98% of traders fail? They fail because they simply just don't know how to protect their capital. It's as simple as that. People don't see their capital as the most valuable commodity that they have, which is absolutely true. Not only that, they don't realize that, hey, if I just cut my losses yesterday, I could have only lost $1,000, but because I was absolutely stubborn, here I am, down $5,000 instead. Think of it as discipline, okay? When you're a student, you're gonna dedicate and allocate a specific amount of time. Why are some students better than the others, right? It's not because they're smarter, right? Some smart students don't do nearly as well as hard workers. And it all comes down to discipline. If you discipline your mind and you psychologically prepare to take these losses and you psychologically prepare yourself to actually study your mistakes, then you're going to do a lot better. A lot of people think that it's just grinding at technical analysis and learning how to do technical indicators and learning how to read level 2 in price action. But guys, it has a lot to do with that, but it also has so little to do with that. If someone honestly asked me my biggest strength, it's honestly cutting losses. It's cutting losses and knowing how to actually learn from my losses especially. I know I've covered a lot of this, or not a lot, but I've covered some of this in course number 1, but not to this kind of detail and extent, and I really need to reiterate it again because I think that a lot of you are getting to a level where it either might be frustrating or you really need to understand the level of psychology that's going to ultimately impact and factor into your trading. Another thing I wanted to talk about with how I view the market is just chasing the trade. We've all been there, guys, where nothing is happening and we feel like we need to capitalize on every single possible opportunity, every single wave up, every single wave down. Not something you want to do. We got to learn how to let the profits and the trades come to us, right? For example, right now, where it stands, okay, this is now October the 27th, Saturday, and we have been in a lull for Bitcoin for an incredibly long time. And because there's been a lull for such a long time, a lot of people firmly believe that they need to try to capitalize on these tiny little bounces all the time. For example, Bitcoin right now is range bound between, between 64.75-ish and 66.50. And during the days, there's just not enough volatility to be making a profit. For example, with scalping, or for example, with even swinging, because the volatility and the volume is so low right now. So what I'm trying to get to say and state firmly is that, guys, sometimes the best traders only take 1 or 2 trades a week. Maybe they're even going to take 1 trade or 2 trades a month. So what I focus on are high probability setups. Now think about this, okay? You want to add for high probability setups size. Doesn't that make sense? Why would you want to play a small amount if it's a very high probability setup with a percentage of possibly 70, 80, even 90% possibility of this actually happening, right? You definitely want to take that setup, because if you do take it, well, you might earn a very large percentage, right? Rather than taking these small little trades throughout the day, that might only earn you a small amount with a really bad risk to reward as well. So I personally scalp, as you guys know, but my scalp entries are so high probability wise that there's such a good chance of me winning. That's why I don't mind playing these $50,000, $100,000, $150,000 position sizes, as you guys have seen me play quite often. So I highly recommend to try to go for setups that have a very high probability and the ones that you know you're going to be profitable on. And I'm excited to go over with you guys like how I actually ladder, right? How I ladder is one of the key things to my success while I'm actually trading, combined with, of course, my psychology and my emotional stability while trading. Of course, I'm like a complete weirdo, right, outside of trading, as you guys know, and combined with my risk management as well. When I go for these high probability plays, right, just to give you guys an example, okay, let's go back to Ripple on when I was in London, right? I was in London, and I think it was on the October the 12th, right here, right? These uptrends right here. These ones right there, I was incredibly profitable on them, and I believe I was playing it on a 10-minute chart over here. You know what? I didn't even get that one on a live trade for the Udemy challenge because I was in London and I was actually in bed. So these trades over here, right? When they were going up, I basically saw this right here, okay? So this is what a high probability setup is to me right here, guys, okay? So I saw this as 1, 2, right? I saw this as 1, 2, and I saw this as a 3, 4, and a very little 5. Makes sense? Okay. So just from the Elliott wave, which you guys will learn later down the road, I saw this as 1, 2, and I saw this as 1, 2, 3, 4, and a really big fifth one up there actually. Or it could have been somewhere in there to make the third, but either way, I saw this as the fifth. And because I saw this with Elliott wave as this one with a higher high, right? Higher high, but I saw this on RSI much lower in strength, right? So that's the second reason. And then I saw the histogram level off there. Those to me were massive signs of bearish divergence. So that is what I would consider a high probability play. So once again, I'll go over it. 1, 2, 3, 4, and 5 that has already formed, right? So because that 5 right there has already formed, because that 5 over there has already formed, and we get a lower high on the RSI and also the histogram ticking down, that to me is considered a very high probability play, and I went for it and I ended up making about $2,700 American that day in bed, which was fairly awesome in my personal opinion. So right now, just to give you guys another example of how I'm seeing the market, okay? Like I'm seeing the market right here as a possible 1, 2, 3, 4, 5 wave count going upwards. I see this as a possible impulse wave going up, right? I see this as 4, you know, somewhere like 4. And I see this as even the first possible wave going up. So now I say to myself, well, this looks like it's descending right now, right? It is, but there could also be a possibility of it breaking upwards. It seems like it's actually an accumulation period right now for this whole month of Bitcoin so far for the past 12 days. And because guys, we're just leveling off, right? Like there's no denying that this right here is kind of a major support region. Yes, we broke it, but as soon as we broke it, it was considered a major bear trap region because we completely just spiked back out of it, right? So I'm seeing this as a possible massive breakout to the upside. So if we do say to ourselves, just as an example of a high probability play, that okay, well, people are snatching it up in this region right here. Every time it gets even near here, we bounce off of it, right? And then the second lower region of support is obviously around this region here, right? Where the bulls simply bought it up. And I personally believe right now that Bitcoin is in an accumulation phase. And during this accumulation phase, between the prices that we're at now, between 60, what is it exactly we're at now? Between 6,450, 6,600, right? Because they're accumulating, it's most likely going to spike up the price as well. So let's say this just broke out right? And assuming all these factors, such as Bitcoin's accumulating, buyers are buying it up in the first range and the second range, wouldn't that be considered a high probability play if it does actually break out of there? Yeah, absolutely. So you'd want to actually add size to your position on there for these plays. So depending on the type of trader that you are, if you do want to wait for these breakout types, right, you definitely want to add size to it. But what I'm getting to, guys, is once again, you don't need to make all of these plays on every single bounce. Absolutely not. You want to wait for the right setup. And being patient is extremely important, and also holding yourself accountable as well. I heard a very wise person say one time that the majority of our losses is because we know better, but we don't cut our losses fast enough because we're actually stubborn. Is that kind of a funny thing to hear? I would absolutely agree with it. That once again, guys, that we lose the majority of times, not because we don't know what the right thing to do is, but it's because we're actually stubborn. Now think about this for a moment as well, where once again, you're doing incredibly well in the market, but you know, there's those few trades in the month or in the year where it's accounting for a large percentage of your month or your year as a loss. So just because you're having like a very good month, but one trade could wipe out a large percentage of your profit, you got to really look into this trade and dissect it as well. These are very key criteria and components to becoming a better trader. You cannot be stubborn in this market. Now, in my first course, I taught the very basics, guys. Honestly, it was on such a basic level to me, and it probably is to you guys as well. Now, talking about the psychology of trading is incredibly important, and a lot of people don't really factor this into becoming a better trader. Wouldn't you guys agree with me 100% with certainty that being stubborn is probably the majority of the reasons why you guys lost? I mean, think about how many times your tiny little loss actually ended up blowing up to a catastrophic one. And you know what the worst feeling is, guys? Thinking to yourself, it's gonna stop. It's gonna stop going up. If you're in a short position, right? You're like, oh, it's gonna stop going up. It's gonna stop going up. Or if you're in a long position, right? And you say to yourself, okay, well, and it's going down, well, eventually it's gonna stop going down. It's gonna stop going down. How many of you guys have been in that situation where you just let it ride and you completely ignore, right? Let's say you were in a Bitcoin short, right? There's no reason why you should have been in the short position in December, right? In early December at least. But guys, it was devastating, the people that were in short positions who kept betting against the market, and it just kept going up and up and up and up, to the point where Bitcoin actually ended up reaching 93 RSI. Now, I don't know about you guys, but that is incredibly strong, right? And then how many of you guys ended up going long, right? Long, let's say at $1,600 here, and then it just kept dropping, 1,600, 11,000, and it dropped to literally $10,000 and had almost a 50% drop in only 5 days. That is where people got decimated in the market. That is incredibly scary. Think about it. The people that have been in a long position, right? They have to sell to close their position because they're in a long position. So the market is dropping so fast and it's so volatile over the days that it's actually adding fuel to the fire. And the bears are actually, not only are they winning, but they're also getting help from the bulls, because the bulls that went long, they ended up closing their position and they sold, which gives strength to the bears to drive down the market even more. Now, when things like that happen, we have to make sure, if you guys were in a position like that where you got liquidated, you have to understand, or even took a big loss, you have to understand the reasoning for why it happened. But all this boils down to, guys, is understanding why we make these mistakes and how the heck did it actually happen. Look at this uptrend, guys. Wasn't that incredible how we saw Ripple go up 1,000% there? You know how many millionaires it turned Ripple into? Or Ripple turned into? It was incredible. But the biggest uptrend that we've seen, of course, is this one recently as well, right? On this, from September 15 right here. That was a massive one right there. Let me just go back to it over here. This is also one where a lot of people ended up losing money. I mean, look at if you were playing on a lower time frame on a 1 hour, I mean, people were probably thinking, how much more can this actually go up if they were in a short position? And the answer is a lot, guys, okay? A lot. That's why we have to combine factors such as Elliott wave, price action, level 2, and so many other weapons that we're using at our disposal. Now, I talked briefly about, not briefly, but in fairly high detail, right, how to look for signs of confluency or to find confluent reasons to actually enter a trade. Now, this one is going to talk about much more factors as well in precise detail. I really do, in retrospect, think that course number 1 was very basic. And yeah, I'm glad it helped out a lot of you guys. But can a lot of you guys actually say that you're still profitable in the market? Say, I know that, don't take this the wrong way, okay, guys? I know a lot of you guys are doing better than me, right? But I know that a lot of people are still very confused about how are you doing this? How are you doing that? How are you able to find profit? Well, the truth is, course 1 didn't teach everything, but this course 2 is actually teaching a lot more in general about just the psychology of trading and just using various methods combined at a much more advanced level than course number 1. So guys, if you were asking how much more can Ripple actually go, the answer was a lot, right? We're talking about spiking from a quarter to almost 80 cents. So the whole point of this topic right here is to never ever let something ride. If it hits your stop loss, take your loss, guys, close your eyes and just hit that X button or close it however you need to, okay? The longer you wait and develop these bad habits of thinking that you can break your own rules of stop losses, and keep in mind that is what a stop loss is. A stop loss is something that is firm, okay? I don't ever have hard stop loss, hard stop losses simply because I like to have mental ones. The mental ones to me are much more important. I don't even input my stop losses in the order book because I like to manually control all of my positions. And think of a stop loss as a rule. Think of rules in general as guidelines that will prevent you from making these mistakes, and they're strategies that's ultimately going to affect your winning percentage over time. And the goal of a trader, the way that I view the market, the way that I view trading, is creating a very systematic approach for success based on your failures. And it's only until you've actually failed several times that you will eventually find success in the market. So whenever these things happen, guys, you got to make sure that you understand nobody's forcing you to hold these positions. Nobody's forcing you to get liquidated. Nobody is forcing you to actually hold on to these positions and completely ignore your stop loss and then hope for the best. And remember that hope is not a strategy. That is why it is so important for us to hold ourselves accountable and consistently learn from our mistakes. The best traders are the people that they're not the ones who know the best technical analysis, okay? Or can do TA on charts really well, who know every single candlestick pattern, who can read level 2. Nah, the best traders are the ones who acknowledge their mistakes over time, and they will constantly improve them and try their best to absolutely not repeat them again. We have this human characteristic to want to be right in the market. And it is not until we can acknowledge our faults as a human being, which is, we're not always going to be right. We can't just hold on to a position and really just hope that we're right. And we have to realize, guys, that making money in the market is much more important than being right. So accept your human flaws that you will be wrong, okay? Nobody wants to hear that, okay? Everybody loves to be right. That is the absolute truth. It's a human innate ability in us where we want to be right. But I assure you guys that when you feel humbled by the market, and when you can show humility to the market and accept that you're wrong, it is only then you'll be able to improve these skills of yours and constantly improve your rules as well. Another thing that I view about the market, and taking profit is that we should never try to literally catch the top or catch the bottom, right? If we're shorting, we don't want to try to catch the absolute bottom. If we're going long, we don't actually want to catch the absolute top. We have to scale our orders and ladder accordingly as well. So once you get your greed out of the way, you're going to be able to capitalize a lot more on your profits, right? Let's say that they're 2/3 to your target already. You might want to consider taking 1/3 of your profit just to make sure that you're actually taking some of your money, right? And sorry, you're cashing out some of your money, and you have guaranteed house money already as well. You know what's more demoralizing than actually getting stopped? What's more demoralizing than getting stopped out? The worst feeling in the stock market is, okay, actually there's two worst feelings, okay? One is where you knew you should have been stopped out, but you decided to let it ride out. And then you turned a small loss into a major one. That is a horrible feeling. And the second feeling is not taking profit when you should have, and then you ended up breaking even or actually losing money because the market eventually reversed on you. And that's usually because of greed, right? I used to be there a lot, guys, where I was in profit and I wanted to be really greedy and I wanted to get a bigger profit, so I chose not to take any profit at all. And then eventually I broke even, or I ended up losing money. That is just a horrible feeling. That is why you need to guarantee that you stay sharp psychologically, and you reward yourself. You can say it, reward yourself as well by taking some small profit to ensure that you're stimulated in a way where you feel good, right? That's really important. So please, guys, take my advice when I say try your best to take a small amount of profit, shave some off of your position size, and it's going to make you feel a lot better in general, and you're going to know that you can secure some of those profits. And another way I see the market is this, guys, okay? There's a big difference between laddering in a specific range. Like if you're going long, laddering as it drops, and you have a range that you're buying. And also if you're shorting, you've got a range at the top where you're adding to your short, okay? Now that is completely acceptable. But now let's say that you are completely in a losing trade and you should have been stopped out already, and you did not stop yourself out. Never, ever, ever add to a losing trade. Do you understand me? I'm looking at you guys really firmly right now, and I know a lot of you guys have done this before, where you are adding to a losing trade, which means you are now 10% down. Okay? You're now 10% down, and then you decided, all right? You decided to double or triple down, to add more to your position because you believe that the market will eventually just drop down. Now, it may just be in your favor, right? It may work, guys, 6 out of 10 times, right? It might work 70% of the time. It might work 80% of the time. But the 20% of the time that it may not work, it will wipe out your entire account. And it only takes one bad trade to get you guys out of the market. And I've heard of many stories where people have doubled down when they have been down 10, 20% already because they ignored their stop loss. And yeah, it worked for a few times. But the one time that it doesn't work out, you will be absolutely devastated. So you have to weigh the pros and the cons. What I'm trying to do is set you guys up with good habits. There's a reason why, guys, I go on 94-day win streaks. It's because I've got a set of rules that are so solidified with such a high probability play that it's really difficult for me to lose these high probability plays. And these set of rules of mine, it's not a guarantee in any way that I'm always going to win. But guys, they are firm, they are set in stone, and I do not break them whatsoever. And I really hope that you guys take that to heart when I say, once again, never add to a losing trade. So just to summarize very quickly, guys, please always remember that the wealthiest traders, they know what patience is. They wait for the trades to come to them. They focus on high probability plays. They write down their trades either on paper or in an Excel. But either way, they will keep a statistic of their trades. Do I keep a statistic of mine? 1000% I do. I just choose not to share it with the public because it's of course very private. But you guys need to keep a statistic of your trade, because without stats, how can you improve, right? Please never write out your losses. Don't turn these small losses into catastrophic ones. You guys might think that all of this is so understood from course number 1, but no, it is not, guys. You're here in this course because you want to know how I think. And I think very differently than a lot of amateurs in the market, or even a lot differently than professionals in the market. Do I think I have an edge? Not really, but I have a way to condition myself to be successful, and I want to develop a formula of success for you guys as well. So thank you very much for joining me for this course number 2. It was actually just supposed to be a very quick introduction to how I view the market psychologically, but it actually ended up becoming a much longer one than I thought. I hope that you've been enjoying this course thus far, and I hope to see you in lesson number 3. Have yourselves a great night and take care. Bye now.